Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Eric Noll, CEO of Context Capital Partners, an alternative investment specialist firm focused on family offices and institutions. He joins me to discuss the continued need for data and market connectivity in the fund industry. Eric, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. Great to see you again.
All right, let's talk about the ATR, the allocator trend report results, and the continued need for allocators and funds for this to work.
Yeah, so every year, as you may know, we have a very large conference in Miami where we bring allocators of funds and hedge funds together for a 3-day confab where they spend a lot of time meeting one another on one-on-one meetings. It's a unique model that we put into place there. And as part of that, though, we do a survey in conjunction with Mercer about trends and what we see going on in the marketplace. And we concluded that at the end of Miami, and we were just about to publish it when the COVID crisis broke. And so we thought, boy, what we learned in January probably isn't going to be all that relevant to what's happening now. So we went back to the people who participated in that survey in January, and we resurveyed them. And the differences are what is really interesting in the trend survey that we learned coming out of that event. So a couple of the things that I think were super interesting for us to learn is in January, the bulk of the participants were clustered around the middle, meaning they like hedge funds, they like hedge fund performance, their attitudes around them had not changed very much. In the middle of COVID, however, it became very clear that they were going to the extremes. They were pushing out to the edges. So the middle got dramatically smaller, and we saw huge growth in people on both sides, people either fleeing to safety, wanting to go to cash, or people fleeing to wanting to take on more risk and looking at how do they get more exposure to this market. So it was a real sort of fundamental change that happened, almost exclusively focused, however, on the hedge fund industry. The same survey results around the PE industry were remarkably consistent. So they didn't change very much. And, we spent a little time thinking about that, talking about what does that mean and the conclusions we reached by talking to people who participated in the survey is, one, PE is such a longer term investment than hedge funds for most people. So the cycle of investment can expand as long as 10 years. So their desire to move or change or their opinions about PE change very slowly because they're in it for a much longer term. Another interesting dynamic, though, is PE returns lag significantly market returns in terms of timing, not necessarily results, but in terms of timing, because they are long-term investments. They're not public. They don't price every day. And so people are waiting to see how their PE portfolios evolved through the COVID crisis before they really started to want to make changes to it. So that was another really phenomenon.
Yeah, and so it's interesting. So the effect of the market volatility and why allocators were looking to move money performed exactly as they should. As you had mentioned, hedge funds are going to look for active management when they need it right then, whereas PE is going to take their time with their investments. That's the whole point of private equity and those kinds of investors. So the question comes down to it, and it makes sense to have redone the survey, why you need this continued data and market connectivity in this space. It certainly lends to that.
Yeah, and some of the other really interesting things that we learned were, we always survey our participants about what really matters in terms of evaluation. Like, how do you make your choices about where you want to put your money? And the things that went up dramatically in the COVID environment, far exceeding what they did in the January environment, were what is your investment process? How do you make the decisions that you make? That became by far the number one thing on the list of what people needed to take a look at. The second thing was what was your performance? How did you do through all of this? Are you doing well or are you doing poorly? And interestingly, and not surprisingly, risk controls was another high one. But the most interesting one, which was not one that I anticipated seeing, was what's the pedigree of the firm? Do you have experience going through these things? Are you well known? Are you a good manager? Are you known as a good manager? those became more valuable in the COVID environment. And some of the ones that became less valuable were things like fees, whether your fund had a gate that was put up, operations, administration, all of the things that you would normally want to worry, I just have to make sure they're doing it right. Those were really de-emphasized in the COVID environment. So I was really fascinated with that as a result, seeing how those things really shifted.
Yeah.
When you made the introduction, one of the things that I want to come back to around the ATR and what we do in this space is really what we've learned throughout this whole ATR thing is the desire and the need for allocators to find investments has only grown in this process, only grown in the new virtual environment, only grown in the COVID-19 world. And as an allocator said to me anecdotally, when we were talking about this, is I am in the business of putting money to work. And now more than ever, I have to put money to work in the right places. And so learning how finding one another, funds finding allocators, allocators finding funds, has now become more critical than ever. We're doing it virtually today. We do it in person at our conferences, and which we were planning on reviving as we go into the fall. But that's really the key here is really trying to facilitate that data transfer, that ability for allocators and funds to find one another in this kind of environment is critical.
Yeah, Eric, it's really interesting that you brought up they're looking for pedigree and longevity, because if you've only been around for maybe 9 to 10 years, it's been relatively easy to ride up, from the bottom left of the chart to the top right. And there are a number of traders and allocators and asset managers who have never experienced market volatility. We might have had blips here or there, but for prolonged volatility such as we're seeing now, it's interesting to hear that they were concerned about that versus just isolating the performance. So to wrap up here, what are some of the challenges that you're looking at for the fund industry going forward?
Well, so I think one of the real challenges, and you just alluded to in your last statement, is because we had had such a long historical bull market that had really historically low volatility levels. What ended up happening is people started to chase performance. They tried to generate performance numbers that would keep them in the top quartile or up near the top as reasons why people should allocate money to them. And what happened in the COVID and the higher volatility environment is all of those return metrics just exploded. They no longer were meaningful. So if I were generating my excess returns because I was long the market, I lost a lot of money for my clients in March. And some of it came back and I've lost some more, and the volatility has caused me to have a lot of variance in my returns. But those funds that really focused on risk mitigation, tail risk management, systematic global macro, they performed exceptionally well throughout the March and the COVID-19 crisis process. And so the real challenge here for allocators and the real challenge here for funds is how do I now reposition myself in a way where if I'm an allocator of funds, that I'm getting into the right funds who can navigate this kind of environment. And if I am a fund, am I presenting myself to allocators in a way that says, I can handle this. I know how to address this kind of market circumstance. And that's why you should allocate funds to me.
All right, Eric, great to have you with us on Trade Talks. Thanks so much for joining.
Always a pleasure, Jill. Be well.
Thank you. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.